Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. There are still two patterns on this daily chart, one broken but seemingly repaired, and one not tested as yet. For third possible pattern I spoke about last week, that is no longer working. The two patterns that are working are bullish. The first, and still the main showrunner for this market since August last year, is the dark blue December 24 to August 2025 bullish Andrews pitchfork. In late May, prices dropped down below the dark blue lower time, which is currently at 11.75 and a quarter, and stayed under it, though still close until the end of June when they shot back upwards, again as a result of forming a small double bottom pattern, Eve and Adam type. However, after the market peaking from that rise, we are again today testing the dark blue lower time. More on this and the double bottom shortly, but first I'd like to discuss the second pattern here now, and it is the early January to late June bright red bullish Andrews pitchfork, with a main feature on this pattern that none of the tines, even now, have been tested since it was formed. We are in today in between the bright red middle tine overhead, currently at 12.75 even, and the bright red lower tine below, currently 11.42 and 3/4. The third broken pattern, and one which was highly speculative on my part, but was a way of trying to quantify the rise seen since late June, was the recent purple highlighted, quite acute, late June to mid-July bull channel, currently 12.29 and a quarter to 12.97 and a half. This bull channel ended up being only a 3-pointer, and as I said last week, and I quote, "I am quite prepared to retire it as soon as it starts looking suspect," end of quote, and I will at least downgrade it by next time, maybe even retire it completely. Okay, so going back to the June-based double bottom pattern, we broke high from this 3 weeks ago, easily reaching both the primary and secondary topside targets. We then had a hesitation over early to mid-July, such that I wasn't sure if it was a topping action or a halfway hesitation. I thought last week that question was resolved with a gapping move higher, making it a bullish halfway hesitation. Well, since then, prices have reached the primary target for that pattern at 12.28.5, but with this week's turnaround lower, the secondary hard to reach target X, up at 12.67 and 3/4, has been isolated, enough that I will now retire it after today's commentary, and just recognize the primary target as having been reached. So this turnaround lower is, as I said earlier, testing the dark blue lower time, but it is also testing the flatlining mauve medium moving average, currently at 11.78 3/4, and the green short medium moving average, currently 11.70 1/4. Plus, we have all the congestion seen back in March and early April, and it looks like the market may have a hard time pushing down through this, and maybe then only as far as the congestion from June, between 11.10 even to 11.40 even. At the same time, last week was the third time this year that prices have tried to test the combination of the December 21 low at 12.23 and a quarter and the 50% Fibonacci line, the April 20 to August 24 move at 12.22. This, for the future, is also worth noting. Chicago soybean meal. Much as soybeans themselves, there are two main patterns here, with a third pattern I spoke about last week that is no longer working. Now, this is where the similarity wears off. You see, yes, we do have an early January to mid-June bright red bullish Andrews pitchfork that has barely had the bright red lower time tested at the start, currently at 307.20. But last week's prices went up to test the bright red middle time, currently at 330.60, but failed at stabilizing over it. However, the second pattern here is a reverse head and shoulders pattern made from over mid-May to mid-July, and a pretty ugly looking one as well, and one that is on the verge of failing as well. You see, last week prices formally broke up over the bright green neckline of this reverse head and shoulders pattern, and that's currently at 322.10. But despite starting to utilize this bright green neckline as a base, they failed to keep a foothold. We are today back down below it, wrestling with the flatlining mauve medium moving average, currently at 317.70, and interestingly the green declining short medium moving average, currently at 315.60. And not too far from testing the slowly rising gold long moving average below, currently at 312.70. This move up gave some targets up above, which I laid out last week in good faith, with a primary target X1 up in the 339.20 area and a secondary hard to reach target X2 up in the 349.5 area. The big roadblocks to this, and they are still up there, are the 61.8% absolute Fibonacci line at 336.30, this year's high at 338.70, and the next major high from October 2024 up at 351.60. I also pointed out at the same time last week that the recent late June to date action had elements of a possible bullish halfway hesitation, with a primary target already reached in the 339.20 area, and a secondary hard to reach target X3 up in the 338.60 area. Look at that the other way around. It wasn't 339.20. It was 329.20. My apologies. And a secondary harder to reach target X3 up at 338.60 area. And that's right on the high of this year so far. All these targets for all these patterns will now be retired after this commentary, bar the obviously reached primary target for the bullish halfway hesitation. As I say, that is in the 329.20 area. The pullback down this week makes them superfluous. Then there is the third possible pattern, which I spoke about last week, one that no longer works, and one which I did warn about as well when I said last week, and I quote, "There is the possible but steep, unlikely, and my willing to retire in a heartbeat, because I lack confidence in it right now, the late June to date dark blue bull channel." That's currently 326.90 to 341.70. There's also only a 3-pointer, which only adds to its misery. End of quote. This pattern will either be downgraded or retired after this commentary. This leads me to my final point, and this commentary would not be complete without my discussing a portion of my commentary which I repeated here now for 165 weeks, so for well into 3 years now. It is to do with the annual key reversal seen here at the end of 2023. I said back then, and I quote, "And I only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we've been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "There is only one thing you take away from any of my musings that have been those words." End of quote. For 3 years, the shadow of that pattern has darkened the skyline of this market ever since. I wondered if prices were now finally sending that shadow to oblivion. Right now, well, it doesn't look so. So please don't hold your breath, as we are still, with all these moves, still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, even when it was being thoroughly tested. It is the bright pink March to August 2025 bullish Andrews pitchfork. The market today moving back down towards the bright pink middle time, currently at 69.23. Whilst all this was happening, a more recent pattern emerged. A dark blue start of February to late June bullish shift pitchfork. Last week we had the market testing the dark blue middle time above, currently at 76.38, where it failed, and prices this week have dropped down such that we are now testing the dark blue lower time, currently at 68.52, which is lodged in amongst some congestion between the July 2008 high at 67.14 up to the July 23 high at 69.12. I'll be very interested to see the resultant moves from this tussle. Now, there was also a third pattern I drew last week, prompted by the actions of soybeans and soybean meal. It's a bright green late June to late July bull channel, which is currently 76.36 to 80.12. I said on this pattern last week, and I quote, "I do not have great confidence in this pattern and would retire it in a heartbeat if it was compromised. But for now, it continues to show the very recent bullish angle of attack." End of quote. Well, after this commentary, I will either downgrade it or retire it completely, as I have decided to do that in my heartbeat. Well, this comes down to what I have been saying here for the past few months when I said, and I quote, "I think for this market, the question is not whether the market is bullish or not, but how bullish does this market choose to be?" End of quote. This is now the 10th week, and the bullish incentive has indeed seen some heavy dampening, but to my mind still is not extinguished, and I'll watch to see if it comes back again to the front. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.